All right, guys, welcome back. This is Yusuf with the Contrarian Daily, and I'm just going to go over a few names for our weekly market outlook for what's today's date? The 29th of January, 2024. So this information would be useful for next week and maybe even future weeks, possibly months to come. So if you stay tuned in, I'm going to drop a little nugget, a little gem towards the middle end of the video that you could use that could provide a healthy outlook and scope, macro view about the markets in general and just kind of how to play it. So with that being said, we're going to take a look at the cues. So the Qs, SPY, heavily traded, lots of volatility. Traders love it. So if I'm not talking about the Qs, I'm talking about SPY. If I'm not talking about SPY, I'm talking about the Qs. So what I like here is we have a level of support, again, technical analysis here, right around that 422, 420 level. You can see we had a strong breakout in the market. That was Tuesday, Wednesday, strong breakout into the market. And then we pull down at a wider angle. So these angles are important. It gives an idea of where interest is. So if we get up really fast and we pull down really slow, it could potentially mean that we're setting up for a continuation move towards the upside. Definitely not a guarantee. These price movements definitely pull down wide like this and will break lower. So you don't want to look at this independently and make a decision. So again, not financial advice. Do your own research and due diligence. What I do like about this move is that, let me get rid of this little pop up, is that we have a lot of compression in this level down here. So I do like that. We see volume decreasing. We have a lot of compression down here, and we have a huge, huge, huge news and earning week ahead of us. So those type of things are encouraging, is that perhaps the market is retracing and preparing for a potential rally. What I like towards the upside, if we're talking about breakouts, on the bullish side, I like it up. Really, I like it where we are, 422, 420. I'll be looking for some long opportunities. But if we're talking breakouts, then 425, 26 would be the bias towards the bull side. 420, 50, 421 would be the bias towards the bear side. So again, to keep in mind, sometimes the market will give you some head fakes and maybe dip a little bit lower, dip a little bit higher before making its intended move. We talked about that in the first video. So you have to have some levels of securities in place to avoid some of these fake moves. And even with all of that, you'll still lose trades. I mean, losing trades is literally part of the business, but having some type of securities and measurements in place will definitely help. So that's what we're doing here today. We'll wait for market open, and then we'll react to what we actually see versus what we think. But with that being said, it does look bullish. One thing to kind of keep in mind, because I know a lot of people are talking about this, and this is the reason why I'm going to bring it up, is that they'll say, hey, we got this big bearish doji at the top of the market. So listen, short sellers have been trying to short this market for a while, and unfortunately, that has not been working out too well. They say it's overbought, it's overextended. I'm not sure if that is actually a thing. You know, the market will buy until it's finished buying. It will sell until it's finished selling. So you might want to put the RSI and the MACDs and all that stuff down for just a minute and just pay closer attention to what the market is doing, what price structure is doing versus what we think it might do. So when you do see these dojis, it's important to open up these dojis, and you can do that simply by getting a vertical line and placing it there. When you place the vertical line on the weekly time frame or any time frame, we'll always go to the beginning of that time frame, and then you can go down to a lower time frame, like an hourly, 4 hour, whatever the case may be, and start to break that down to see how it's actually being structured. We have a new high. We have not made a new low. So by definition, we're still bullish long term. The minor term, the midterm, if you want, or minor, is bearish because we're trending lower, but the major move is still bullish. So we're going to talk about targets. Again, lows, highs. We'll talk about targets. Well, we're looking for a 10-point move potentially next week, and it could go even higher, 12, 13, 15 points within a week time frame on the Qs. So that's a pretty big potential move. We do have metrics to support that. Again, we have FOMC, we got non-farm payrolls, we got huge earnings in tech sectors, etc., Apple, Amazon. So we do have a climate or a condition that could support a potential 10 plus point move on the Qs. So that's the Qs. Let's go on to the next. We're going to pull up Love or what's the name? Southwest Airlines. So I kind of have this marked up a little bit. We do have this nice bullish engulfing candle, the hourly, so that's interesting. So what we talk about with Love, what we see here, I want you guys to notice a few things. The first thing is you see this big bullish engulfing candle bar, very little shadow or wick towards the top. This bullish engulfing candle bar broke the neckline of support, or resistance rather. It broke the neckline of resistance, and now price is retracing back to where that neckline is, forming potential support. What I like about this breakout is that we had 4 days of selling down, and it was all erased in one day. The last 2 days of that sell down were 2 bars where the market was compressing, and then we broke back up bullish. The following day, we had about a 40-50% retracement, and we closed with a narrow spread towards the top, if not higher than the close of the last bar. A very narrow body close to support that the bulls were still in command. So I like this breakout. Although we did have some compression as we traveled back up to the next level of support around $33, we did get this big bearish engulfing candle. But what I like about that candle is that we have this shadow or this wick towards the downside to suggest, hey, there's some buyers here. And then the very next candle, those same buyers push this candle all the way back up and then close with a narrow spread. But the difference is that it had a lot more wick towards the downside. So the wick is increasing towards the downside. That means the buyers, in my view, potentially are increasing their dominance and position to this move. So it's very likely or possible that we could see another bar come Monday, Tuesday, which could ultimately result into a reversal bar or a bearish bar with even a smaller body with more wick to the downside to suggest that possibly the buyers are increasing their positions to take this stock higher. So something to keep in mind, what you have on the volume profile, again, we have volume decreasing as prices going lower, and effectively it led to the breakout towards the upside. So the question is, if we really want to go lower, why is volume decreasing as we're going lower? We find that to be a divergence within volume. So if we are truly going lower, volume should be increasing towards the downside, not decreasing. So rather you see this as a potential inverted head and shoulders. Like the structures are important, or the pattern rather is important, but it's really just more so about what price is really doing, right? So rather you see it as a potential inverted head and shoulders, or you see it as a potential broken bull flag continuation, very similar to what we've seen in SPY the week before. That is not as important to me as the fact that how we broke out of the structure and how we're retesting those zones. So that's something to keep in mind. I did mention that I was going to give you guys a little bit of a nugget, so I'm going to do that now. So make sure you like, you subscribe, so you can catch some of this stuff as I'm going through it. So this video is a little bit longer, but I'm gonna make sure that it is just as informative and or more informative rather. Let's go to a 12-month chart. Okay. So you can see here on the VIX, the VIX is the volatility index, but most people look at it as the fear index. You can see here when the VIX gets low, that means people are very confident and comfortable and cozy. When the VIX gets high, people are very fearful and uncertain. So you want to buy when the VIX is high, and you want to sell when the VIX is low. So, and you could, when you have some time, pull up your chart and match up the dates with the stock market. You can see it's pretty accurate. It's an inverted correlation typically. And obviously not across all assets because they perform differently, but we're just talking about the stock market in general. So we're at 13 on the VIX. I do think we'll get lower prices on the VIX down to the $10 range, maybe a little bit lower in the $9 range or lower. That is suggesting to us that this party is just about done, where we still have some room to grow, but the best of the moves and the most of the moves generally are behind us. So if you're looking at options, you're looking at stocks, this is something just to keep in mind as a reference. When the market's going crazy, everyone's talking about it, everyone's paying attention. That's typically the time that the party starts to die down as far as what is actually going to happen, the movements that are ahead of us. So keep that in mind. The VIX, I put a little notes on here where some long-term buy opportunities could be in the $35 range and the $85 range. So that's something I'm just keeping in mind, not a hard number or something I'm doing blindly. But these may be areas where we, if not get a pop, then maybe we could, continue for higher prices. So we don't have to be at extreme highs, but this 35 range is pretty good level for some buys to be considered. All right, so that was your little nugget. Let's talk about our other name, which was Square. And also with the targets on Love, I was looking right around 35, 37, 40 for those targets. And what I like about Love is that those contracts are really, really cheap. So for someone that may have a smaller account that is comfortable risking 100% of that contract, options are extremely risky. You absolutely do not need to trade options. Trading options, frankly, isn't for most people, and I don't say that to sound sexy. It really just isn't for most people. So what you could use this for is finding opportunities where stocks are cheap. It's really hard to call bottoms and tops. Some will argue impossible, but you can use some of these tools as a guide to find stocks, assets that are cheap, that are on discount, that you can get at a better value. So that's something to keep in mind as well. So with Square, much like Love, much like Southwest Airlines, we're starting to see the volume profile decrease as we're getting lower. What I like about Square is that we formed a double bottom potentially, and we did that right at a level of support, right at that 62-ish range. You can see here. So whenever in doubt, scroll out, look left, and you can kind of see some structure here. Ideally, I would love for to see it come pull back into the structure right here before it's sold down, but that's not something it needs to do, obviously. But that would have added even more validity to that level. That being said, this is still a pretty valid level right here at 62. We see volume decreasing. From the highs to the lows, we're right at the 50%, the 0.618 on the Fibonacci extension tool. If you are not familiar with Fibonacci's, I'll do a video about them and explain why that's important and why we factor that into our trading profile. So it's right in that golden ratio for those that are familiar. Double bottom right into that golden ratio, and then we have a volume profile decrease, and then we have this nice bullish engulfing candle. Now, if you look closely, we do have a little bit of shadow on this engulfing candle. So that does suggest that maybe we might see a day or two of consolidation before we actually make a move. But it doesn't have to. This thing can continue up. So this Square is one of those names that I like for options. I'm looking at March 15th options on Square and on Southwest Airlines. These options could go to absolute zero, worthless, or it could be a contract that does 300%, 500%, or better. So if you are investing, the only thing that I would suggest for you to consider is using proper risk management. Don't put any money into the market you're not comfortable losing, and you're not going to make a dramatic change to whatever you're doing overnight. So just keep things perspective and balanced. So I think that's just about it. We're going to talk about a few other names. So you put in the comment section what you want to see, what you have in mind. Again, tons of names coming through earnings. So some of you guys might be looking at Apple, Tesla. Tesla's my baby, and she has not been treating me well. So we could talk about all those names. So yeah, just put into the comment section what you want to see. If you agree, tell me why. If you disagree, tell me why. And I would love to know your feedback and what you guys think. So that's all I got for